In this video, we will talk about Aitx, what the company does, the recent events influencing its share price, and if you should buy its shares. Aitx operates in AI and robotics and aims to provide solutions to its clients with those technologies. When we look at the financial statements of the company, we can see that on one hand, the company has more cash and less liabilities compared to previous period. This is good news because that means that the company is in relatively better financial shape and that it is better equipped to face its short-term debt obligations. On the other hand, the company has accumulated a lot of deficits over the years, and it is written in the notes that the company relies on raising capital in order to finance its operations. And if it does not raise enough money for whatever reason, it may go bankrupt. This means that Aitx has two very serious risks for its investors. If nothing significant happens, the shareholders may either get diluted due to additional equity sales or plummet to zero because it did not secure enough funding from the financial market. That being said, recently the company announced that it sold 9 units to a Fortune 50 company, meaning one of the top 50 corporations in the world, and that a durable commercial relationship has been secured. This is an important milestone for Aitx because the fact that a Fortune 50 company purchased its product is a layer of recognition for the quality and reliability by itself. Furthermore, the business model of Aitx is subscription-based, meaning it makes money from relationships, not the sales volume of its products. This means that it may not require large amounts of capital to invest in manufacturing facilities, since it is incentivized to manufacture items that are doable so that each sale can last as long as possible without requiring them to keep buying new materials to replacing the existing ones. Before we move on to my recommendations, if you like my content, please like, comment, subscribe, and check out my channel for more stock analysis videos. My recommendation is to buy the stock if you have a sufficiently diversified portfolio and a high risk tolerance. Currently, the stock price is at 14 cents, and it peaked at around 26 cents before correcting lower along with most of the financial market. There was no significant reason that can justify the stock movement from the company's perspective. But the fact that US Federal Reserve announced that interest rates may rise up in the future has pushed the financial market down. The relationship between bonds yielding interest and stocks yielding dividends is like a seesaw. When interest rates increase, there will be more capital going to the bonds from the financial market. When the interest rate is low, bonds will provide lower yield for the bondholders, which will force them to move more capital into the equities market. This is why, for example, the stock market over the past 10 years has been phenomenal. One important reason is because the interest rate has remained very low or close to zero, and a lot of capital went into the stock market, then propped up the assets price. The quantitative easing during the same period also contributed in this phenomenon. My point is that the company is enjoying a positive sequence of events that will have a positive impact on the stock, while the stock market at large is going through a price correction. This means that the current point in time may be a good opportunity to enter the stock and to benefit from a bullish run. One significant reason why I believe that the stock price is likely going higher is because the company's Q1 results are due soon, and there is going to be some good surprises on the company's revenue thanks to the transactions we mentioned above. This comes from the company's founder. This may or may not be the case, but keep in mind that the company has an incentive to prop up its own stock price to keep raising capital in order to finance operations. Therefore, the owners of the company probably know what to say in order to provide a positive perception of the company, even if the reality may be less rosy. In other words, we are speculating on the increase of hype around the date when the financial statements are released a few weeks from now. This will probably push the price higher and should give traders a good opportunity to pocket in some profit. Due to the high volatility and the nature of the company, the maximum exposure is limited below 1% of your portfolio. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.